Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into the Federated Hermes short-term government trust report. It's like trying to understand your grandma's secret recipe, but instead of cookies, we're looking at money and investments. Let's see if we can figure out if this trust is a sweet deal or if it will leave you with a sour taste. This report is from February of 2025, so it shows how things looked then. This report is all about the Federated Hermes Short-Term Government Fund, which is part of the Federated Hermes Short-Term Government Trust. It's like one flavor in a whole box of chocolates. The fund aims to give people current income by investing in US Treasury securities and other government-backed stuff that matures or comes due in 1 to 3 years. Let's talk money. Imagine you put $10,000 into institutional shares. It would have cost you $37 to manage that money for the year. That's 0 shares. It would have cost you 6 to handle it. It's a relatively small amount. Now, if you had service shares, it would have cost you 60 to handle it. It's a relatively small amount. Now, if you had service shares, it would have cost you 6 to handle it. It's a relatively small amount. Now, if you had service shares, it would have cost you 16s to handle it. It's a relatively small amount. Now, if you had service shares, it would have cost you 16s to handle it. It's a relatively small amount. So what made the fund do well? They added holdings of agency mortgage-backed securities and agency debt, and also benefited from correctly guessing that interest rates for long-term bonds were going to rise relative to short-term bonds. What went wrong? First, holdings outside of the index in agency mortgage-backed securities caused an overweight to the longer maturities. Also, 2-year treasuries hurt performance. Here's where it gets interesting. Institutional shares did 5% over the year, 1.08% over 5 years, and 1.13% over 10 years. The Bloomberg US Aggregate Bond Index, a measure of the total US bond market, did 5.81% over 10 years. The center of the fund underperformed the Bloomberg index but almost matches the ICE index. Service shares did slightly worse, which is expected due to higher fees. However, 3-year US Treasury index, an index of short-term treasuries, did 5.28% over 10 years. Essentially, the fund underperformed the Bloomberg index but almost matches the ICE index. Service shares did slightly worse, which is expected due to higher fees. The fund has about $47.8 million in net assets. They have about 25 different investments, and the portfolio turnover is 79%. This means they sold and replaced almost 80% of their investments in a year. That's pretty active. Most of the fund is invested in US Treasury securities, almost 58%, followed by 26.9% in collateralized mortgage obligations and about 12.1% in mortgage-backed securities. Okay. Let's switch gears. All companies must have a code of ethics for their big shot officers. It's like the honor code in school, but for business. The fund says they have one, and there were no changes or get out of jail free cards given out during the year. The audit committee needs to have people who really understand accounting, and the fund says they do. They have 3 financial experts on the committee: John G. Carson, Thomas M. O'Neill, and John S. Walsh. How much did the accountants cost? For the fiscal year of 2025, it was about $35,000, a little bit more than 2024. The company's audit committee has policies about approving work by the accounting firm, making sure the accounting firm stays independent and doesn't get too cozy with the company. The company mentions the shareholder meeting. At the shareholder meeting, there was a vote for trustees, which are basically people that run the fund. The vote results are listed. A few new folks were elected for service on the board with existing members of the board. Here's a big one. The board of trustees had to decide whether to keep using Federated Investment Management Company as their advisor. After looking at all the factors, they said yes. They looked at how good the service was, how the fund performed, the fees, and everything else. And finally, the independent accounting firm said everything looks good, and the financial statements are fair and accurate. So what do we make of all this? The Federated Hermes Short-Term Government Trust seems like a pretty standard low-risk kind of investment, and the fund's performance, particularly in relation to its benchmarks, is something to keep an eye on. While its returns are generally positive, lagging behind the Bloomberg US Aggregate Bond Index raises questions. It is possible that the fees associated with actively managed funds make it difficult to beat the returns of index funds. And also the high portfolio turnover is notable. It suggests a very active trading strategy which could lead to higher transaction costs, so it would be useful to understand if this is something common to the fund. Overall, it seems like the fund is doing okay, but it might not be the best option if you're looking for high returns. It's more like a safe place to park your money. Thanks for watching. If you enjoyed decoding this corporate filing with me, don't forget to like, comment, and subscribe for more deep dives into the world of finance. See you next time.